Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, June 19th, 2017. It's almost 11 o'clock Eastern time as I'm starting this video, so the market is open and trading. I wanted to do an update on the solar stocks. What I plan to do this week, I'll be leaving for vacation this coming weekend. It will be a working vacation, so I'll be bringing along at least two computers working, posting charts and updates, anything important. But until then, I wanted to really focus a little bit more on trade ideas. You know, I've done a lot of a market analysis recently, and that's because we've had, for the first time in many months, some significant technical developments. But let's get to the point. I'll cover that in another. I'll do a market update later today with either some static charts posted on the front page, maybe a video, maybe a little of both. This is Trade Ideas, both a follow-up to the solar stocks. I started highlighting those back in early April, around the beginning of April, is looking very bullish. I also want to state on a related note, I'm watching the energy sector closely. I've shared my thoughts quite a bit lately on XLE. I favor a little more downside, but I think the energy sector, and I'm talking about the oil stocks, is setting up. Energy is a broad, obviously encompasses both solar, petroleum, energy companies that pull it out of the ground, refine it, et cetera, et cetera. So right now we're going to stick with the solar stocks. They've done very well. Not all of them. Those that haven't are setting up, and that's why I wanted to do this video. I still think there's trading up. So we're going to go through these, and what I'll do is I'll start out here as a refresher just to see how things have played out. Here's a post that I put back, an update back on May 25th, following up with some of those earlier charts back from April. As you can see, all the charts on the right side of the chart are always time and date stamped up in the upper right hand corner here. So this one was back on April 4th. SEDG, one of my favorites. You mentioned some targets here, 3 target levels. There was the follow-up chart on May 25th. You could see that third target had been hit, and these were additional potential targets up here. And this one's just doing great. If you look at where we're at right now, you can see it as is often the case, and this is why I have multiple targets. You can see as each target level is hit, there was a sharp move, a momentum-fueled, what I call a momentum-fueled overshoot. We closed back down on that level, closed a couple days on it, and pulled back. And this is, again, why I have different targets. Some people like to prefer to take profits at the earlier targets, hit and run, get out. Others like to maybe game a reaction, close your long position and re-enter it on a pullback, maybe even short off a hit of a target level. But either way, you can see how well the charts work. You can see the reactions on each target level. Punched up, hit T4, pulled back a little and powered through there. And then we've since hit that next target up here around 2015. And, this one's getting a little stretch. I'm starting to see a little divergence. I would not chase this one now. If you are still long SEDG, which is SolarEdge, I think it's a good time for a trailing stop or maybe a hard stop right under, a little bit under 1795. I could actually add a pretty decent, I see quite a few reactions there. So that's what I would do with that one. And something else you can watch as well if you're long this one. You sort of have an uptrend line forming here that you don't want to see go. And now let's move on to some with a little more meat left on the bone. Okay, this one is symbol SPWR, SunPower Corp. Back on April 4th, I mentioned it here at the bottom of this falling wedge. I said it looks good. Aggressive traders could take a full or partial position there at the bottom of the wedge, and highlighted this scenario going on, have a reaction at the top of the wedge, pull back, a breakout. There's your next objective entry, and you can see the targets are the horizontal lines. Strong divergence. That one went on as expected. You can see if you zoom in there. Remember, all these charts, once you expand, these are off the website. Once you click to expand a chart, you can pan, zoom, do whatever you want. You can see there's a reaction, couple reactions there, and then boom, broke through the trend line. And again, that was the update on the 25th of March, I think. I'm sorry, of May. And let's take a look at where it is today. So we went on, we hit that first target, and there's the reaction. You can see we danced around that target level for weeks on a sideways range, pulled back a little bit, and you know, as I often say, prices can correct in one of two ways or a combination thereof. They can either correct in price, meaning they pull back after hitting a target or becoming overbought, or they can correct in time. In this case, we have both. It corrected in time, moving sideways for a while, pulled back a little bit. So this one still looks very good longer term. Now, what you want to see is a break above that recent consolidation range. That would be your next buy signal. That's roughly, we'll call it 840 to be safe. And here's your first target. These are unadjusted. These are the actual resistance levels. When I refer to a target being unadjusted, that means I always set my sell limit orders. If I was targeting this level, the resistance is around 922, I would set a sell limit order a little bit below that, maybe 5, 6, 7 cents. It all depends on the share price, to avoid missing a fill. Sometimes stocks will reverse just shy of a identified resistance level. And this one has quite a few reactions. You can see all the reactions to the left. So I would expect a reaction if and when we get there. So maybe 915, you set your target if that's where you're targeting. Otherwise, I think it over time can head up here to the $11 area, and then there's a huge gap to be backfilled if and when that $11 level gets taken out. But as always, I would expect reactions along the way. And like I said, this one still looks good because if you really look at the scope of the pattern, this was a very large bullish falling wedge, which has broken out, and longer term that one still looks good. But again, you want to see this level taken out. That's your next buy signal, or pull back. Maybe we come back in and back test this downtrend line at a lower level. I will say the volume was a little bit light for what I want to see on a breakout, but with that being said, price comes first, and everything looks good on this one longer term. Okay, next up is CSIQ. That's Canadian Solar. This again going back to April 4th. This was a chart, and I mentioned it then. At this time, it looked good. We had a breakout of this downtrend line and a back test, a successful back test. So I, gave it a path going up here. There was a resistance level, pull back, and then a move up ultimately, which I still favor to that $16 level. This was the update on May 25th. Just as projected, we went up, had a little pullback, and started to work our way up there. Let's take a look at the chart now. So here's what's happened since then. We continue to really flounder around this area here, and I've added what appears to be a symmetrical triangle pattern. So if you are currently long the stock, I'll say this now, I'm not crazy about this uptrend line because there's only a couple reactions. The more reactions, the more valid the trend line. Either way, it's worth mentioning. And I'll tell you, as far as stops go, you have quite a few reactions there. That's around the 12.14 level, so maybe a little bit around $12 or so. If it gets under there, that might be a signal, a time to stop out, and you would still be profitable because this is where it was first mentioned as a long. It depends on where you took it, of course. Now, this downtrend line has more reactions. I do like this downtrend line that forms the top of that triangle. So your next buy signal would be a pop above this downtrend line, ideally on increased volume. 16 still my initial target on that one, and then we'll just have to go from there, see how the sector looks. Next up is HQCL. I guess that's Hanwha Q-Cells Company Limited. Mentioned this one needed to take out the 775-ish level. This is horizontal price resistance, and then we had a downtrend line, and we still do just above there, and there's the target if and when that the line's actually at 773, so I give it a couple cents to, as a margin of safety to help prevent a whipsaw signal. So still waiting for a break above that level. That was the update back on May 25th. Still waiting, 775 to go. And as of today, you can see it hasn't, they ran up, they challenged that level, and as well as the downtrend line. So that's beautiful technical analysis. You had downtrend line resistance, pretty well defined. Now there's 4 reactions as well as price resistance. And so that's still your key level. An early buy signal would be a break above this downtrend line because now it has 4 reactions. It's pretty valid. So maybe a quick trade up to that level again, but you can see the nice bullish divergences setting up on this one. It put in another divergent low, so it extends those bullish divergences. And again, the sector has traction, and I'm warming up. I'm very much warming up to the energy sector, XLE, XOP, the the major gas exploration and production stocks, as well as the integrated oil like Exxon and Chevron. All those big companies. So again, that's what you need to see that one. We don't have a buy signal yet, but it's setting up nice. And you know, if it were to go, let's just say from that breakout, let's say you waited for the 773 level to go, and it runs up to 980. You're talking 26%. You know, the first one that I touched on, what was that? SEDG or SEDG, SolarEdge. You know, that one's already gone up, I don't know, 30-40% since it was mentioned. You know, as a lot of these, we have double-digit gains in a lot of these stocks so far. And I'll add to that, it's also been very selective stock picking in this sector. Sometimes you have certain sectors. I'll use gold miners for example. You know, birds of a feather flock together. When GDX is rallying, just about all the components of GDX are rallying, and when it goes down, just about all of them fall. There's a very high correlation. That's different in the solar sector. Part of that has to do with, you know, some of these companies, they do different things. Some make solar panels, some make chips, some are, yeah, there's different companies, a whole different set of dynamics with each of these. And my point being that, like I'm showing you here, some of these stocks have rallied, you know, 40, 50, 60, or 80% or more off the lows, and maybe, you know, that much just since they were highlighted back in early April, whereas others continue to move lower. So again, you got to look at these buy signals. You know, don't jump the gun unless it's an objective entry. Like I say, if you go long at the bottom of a falling wedge or long at support, you can do that. Otherwise, you wait for a breakout above resistance. A quick update on First Solar. This was, you know, this was an official trade idea. We did very well on this one. Caught it right at the lows. This goes back to April 4th, and that's an update. That's another April 4th chart. Let's see what happens. So there it is. We hit that final target. I originally had a final target here at 38.35, and as you can see, I revised it at this point, expecting a pullback, and we did. We had a very sharp pullback. We overshot my revised target at 36 by just a little bit, and then dropped. That stock gave up. I think it was well over 10%. Then it powered through to hit the original final target, and actually went a little bit above. You can see what it did is it backfilled this gap. See the gap right there? So a beautiful gap backfill, and it got very extended, very overbought. But the reason I wanted to go over this one, longer term, this stock still looks good. First Solar is one of the leading solar companies. This line here, you can see quite a few reactions. So it's pulled back to support. Personally, I'm not jumping back in this one yet. If things get a little ugly on First Solar, I think it'd be a great buy if it comes back in here again to this, you know, $32-ish area. But it may continue to power on up, especially if the sector starts to get a bid. So you want to watch for a break of that previous reaction high, and then a break of this reaction high back here, and then that one should be smooth sailing. But as of now, the risk reward doesn't stand out as compelling to me. I just wanted to update that for those of you that might have tucked this one away as a longer term trade, you know, because we got in way back here, down right off the lows. Okay, this one was posted on, you know, as a new setup on May 25th, and there's the notes. VSLR, VIVINT Solar. VSLR could run to the 370 area on an impulsive break above 320. It was at 310 at the time. Let's fast forward to today. That was VSLR. And boom, there it is. I'm popped above 320, and look at and this one's taken some pretty nice volume, had an impulsive move. So there was a trade that you know, produced a quick 15%, and it just took that level out almost as if it wasn't there. We didn't have any type of reaction, and that is, you know, if you take a longer term look at this stock, you know, step back, this is a nice long-term basing pattern, and that's very healthy price action there to see a breakout of that basing pattern. So this one, hard to say where it goes. I definitely see some resistance there around 542, and not a lot in between there. It's pretty thin, so that's, you know, pretty healthy breakout. If you're long, great. If you're not, at this point, it'd be nice to see it come back in and backtest that 370 level. So maybe grab it a little bit above there, you know, buy it, step in around 380 or so with a stop, maybe around 360. Depends, again, you got to give these guys room. This stock is up 6.25% today. If you trade a stock that can run up or down 5+% a day, and you're running tight stops, 4, 3, 4, 5% stops, you're going to get stopped out on any given day. You just have to expand. This is what I talk about, beta adjusted position sizing. When you have a stock that moves in big daily price swings, take a smaller position, take maybe a half a position, and then if you normally use, let's say, 8% stops, that's your stop loss limit, then you can allow a 16% stop loss, and you're still going to lose only the same amount of money if you took a 50% position size. And it cuts both ways, because the price targets, I mean, like I said, this stock already ran, 17 or whatever, 15, 16%. Just to that first target and kept going. So far it's up 32%. So the gains are above average on these guys, and as should be the loss allowances if you want to stay in these trades and successfully swing trade these stocks. Okay, another one that looks good is CAFD 8.3 Energy Partners LP. It was flirting here with this downtrend line. This was back on, that was at May 25th, from that May 25th post. Let's take a look at it today. And it broke above that level, and it's maintained above it. And each of these lines, any horizontal line you see on my charts, are either support levels if below or resistance levels if above. So this one has danced along that support level pretty nice. And it's been consolidating since the breakout. The breakout was not very impulsive, so this one could still go either way. But if you are long or you want to go long, you try to go long here at the bottom of that range. And your next target, I had a resistance level here at 1402, call it 14. We really almost hit that level. We came close enough. We had a high of 1392, so effectively we hit it. So let's, I don't know what. Okay, the chart kind of blanked out on me. So that's it. It's working around in this consolidation zone. If it breaks above 1402 with the conviction, your next target is up here at 1480 and then 1569. And again, keep an eye on the energy stocks as well. Oil always helps. Oil prices have been really soft lately, which actually speaks volumes to these solar stocks doing well. Typically, they move not in direct synchronicity, but somewhat in sync with oil, because oil is an alternative energy source and, competes with solar. When oil prices are very high, solar energy, which still to this day costs a lot more to produce, X unit of energy using solar. The only reason these companies exist and have existed is government subsidies. But they're, over time they become more efficient. The semiconductors and the technology in solar panels is more efficient. And but bottom line is, when oil's dirt cheap, there's solar doesn't look as attractive. But with that being said, that speaks volumes to me to see a lot of these companies rallying in spite of low oil prices. So now just imagine if oil starts to advance and climbs 30, 40, 50% over the next year or so. That should bode very well for these stocks. Either way, the story is the same on this one. We had a divergent low, bullish divergence. We have a breakout, and those are your targets overhead. Oh, my apologies for that pause there. I thought I had paused the video trying to look at the next stock. Next one up is GLBL. That's TerraForm Global, and I had a level 493. I've tweaked that slightly. I said convincing break above the 495 area. And convincing, by convincing, I mean an impulsive move, ideally on above average volume. Let's just fast forward. This one still has room to run. It's really been pressing up. When you see a stock doing this, that price compression, trading in a tight trading range, multiple tests to that level. Let's just forward to the chart today. Here it is. As we zoom in, we can see it. I've modified that line to be right at $5, and you can see it's just really tapping on that level. And we also have an uptrend line. So what's nice about this is you have you could even go long here in anticipation of a breakout with a stop not too far, somewhat below this downtrend line. Remember, this thing, once it breaks loose, there's a lot of there's big price swings. It's a low price stock. It's only $5 a share now. A year or so ago, it was, you know, in the $3 range, and you can see some really big price swings. And so what? And those big moves usually come from periods of price compression like this. So just watch, you know, keep an eye. It is possible. I'd have to check the news on this. Maybe there's some type of buyout in play or something, because that is unusually tight price compression. And if that is, I recommend, and I haven't done this, my apologies, I should check the headlines and do that as well. Make sure that this company isn't being acquired. I should have done that ahead of time, because that's sometimes what you'll see when prices compress like this, especially, you know, being pinned around a certain price level. So let's just move on from that one. And if that is the case, again, you can just do a Google search for news on that company, and they'll tell you if there's any, you know, pending buyout or something going on there. Okay, so those were the trade ideas covered back on that May 25th post, and some of those from the earlier one on April 4th. I left out SKYS. That was a low price one. It never broke out of the downtrend line that I highlighted, and it's really dropped down lately quite a bit, and it's well below that downtrend line. So A, it never triggered a buy signal, and B, it's far away from breaking out. So I'm just going to go over a few other names that stand out. This one is JKS, and again, I've done a video and I've covered all of these stocks that I'll by the time I'm finished with this video. They were all covered in a video in recent months. This one continues to work its way up nicely. Had a big spike, a big run up. So this is a downtrend line to watch. If you're long, that might be an early sell signal. There's also a horizontal support level, which it pulled back, tested the downtrend line, and now it's above that level, and may want to move back up here to the 2022 level. Run. This one, actually, this is a new one. I've added this. I've had it on my solar stock watch list, but I've now added it. I flagged it, meaning I'm watching it closely because it looks good. Run has this downtrend line with several reactions, and it recently broke above it. You can see that. Moved up to the downtrend line, tested it for a few days, and now it's broken out impulsively. The breakout was on high volume. You can see a volume bar down here. You can just make that out. And this one looks pretty smooth sailing up to the 635 level. There's some minor resistance around 618 or so before it gets there. But it's still, if it makes it up there, you're still talking about another 9% or so up to that 635 level. And it may continue from there. Again, a lot of these stocks appear to be bottoming. There were divergences at the lows, and that one looks good. TERP, here's another one, TerraForm Power, TERP. Look at the nice downtrend line. You have support here, so that you can play this one of two ways. If it pulls back down to the support level, look at all the reactions that we've had in the past. A lot of reactions back here, here, reactions from below back here. So there's one of two places as a trader you make an objective long entry. Either pull back to that support level, it's around 1112. Maybe step in just a little bit above that, 1116, 1118, somewhere in there. Or you wait for breakout, especially convincing breakout. That's a pretty well-defined downtrend line. My first target would be, again, unadjusted around the $14 level, and then up there around $14.50 or so. And that'd be a, you know, again, it's a pretty nice move if it does make it up there. VNPTO, so the TO means it trades on the Toronto Stock Exchange. This one was covered back in April, I believe, either in a video or in a static post. I had this triangle pattern, and this one has just rocketed. So congrats to any of you that caught it. Unfortunately, I didn't. I had, you know, traded several of the solar stocks, but not this one. And that ran 70%, over 70%. I didn't grab right at the breakout since it broke out of that pattern I was mentioning. So, and it looks good. It actually looks like it's, you know, flagging here after that strong advance, and may have more room to run. It's a low price stock, but that low price stocks, it tends to go hand in hand, risk and return. They have more risk. They can fall more in percentage terms, but they definitely have more upside room than a big mega cap company. Okay, only a few more to go here. This is JASO, JA Solar Holdings. This was a nice downtrend line. You can see that blue downtrend line, a lot of reactions. We had a breakout and a back test. It all started with this bullish falling wedge pattern back here, and I believe that might have been highlighted at the time. I've had this on my chart for a while. Breakout, came back in after the initial thrust up and just was a monster run right into resistance, a little momentum overshoot. But now we've pulled again. We've back tested. So this one looks objective here, and it may power up. Those previous reaction highs, I would target that 725 level again for the first target. But if it takes that out, this one might have some more room to run. YGE, I like this one. We traded it before. Well, can't remember if it was an official or unofficial trade idea. Again, there's so many of these I can't possibly track them all as official trade ideas. But here's YGE. There was this yellow downtrend line. We broke above it, had a nice rip, hit that first target there, fell a little shy of that next target. Since then, what I'm focusing on is this pattern here, sort of a wedge type pattern of a pretty well defined downtrend line. You can see it coming in off the highs. Divergence, bullish divergence, positive divergence here at the recent low. So what we're looking for is a break of this downtrend line. The 224 level is significant. So if you want to take a break there, just keep in mind you're going to have resistance to challenge at 224. It may punch right through that. You could certainly take quick profits there. I mean, it's at 206 now. If it runs to 224, that's 8.5%. It's not a bad quick trade, but I'd love to see that level go. So maybe a half a position here, or on a breakout, I should say, of that downtrend line. Then if it takes out 224 with conviction, these are the next stops, 250 and 290. And I'll say this is my preferred swing target right now, 290. So from where we're at, you're talking a gain of about 40% if it gets there. That one looks promising. Here's TAN. I should have covered that in the beginning. For those of you that prefer ETFs over individual stocks, this is the ETF for the solar stocks, symbol TAN. And what you can see here is a nice basing pattern. So again, just like the energy stocks and XLE and XOP that I'm watching, here's one that's been basing. Pattern looks a little different. I'm not comparing the pattern of XLE with TAN. I'm just saying that they both look to be setting up as one of the more bullish sectors that I see right now. So we need to see it take out the top of that range. There was a downtrend line. It broke through, but then it fell back below. It's right here. You can hardly see it on this chart. So again, that's the more important level. Nice divergence here at the lows, but it's just been basing, moving sideways. So we need to see a breakout. And by the way, that level is about 916 or so. And to wrap it up, these are very low price, extremely speculative stocks. Tremendous amount of risk and a tremendous amount of reward too on the upside if they play out. Big bullish divergences on this one, ASTI. This is a penny, 1/10 of 1 cent, a fraction of a penny a share. So this is a very low price stock. If you don't know what you're doing with penny stocks, low price stocks, stay clear of it. A lot of these stocks, when they get that low, often never recover. But again, even if traders just come in and play a quick pop, and there's a downtrend line, and this one could run up to that first resistance level, and that's about a 360% return. So if you want to sprinkle a little speculative money, your casino money, a few $100, whatever it is to you, then maybe it's worth a shot. BSRC is another very low price, half a penny a share. I'm sorry, 5 cents a share. And it had a breakout, ran up, hit this resistance level. See, these penny stocks actually play out. They trade very well to the technicals. There was a resistance level there, downtrend line. It broke out, hit that resistance level to the penny. I might have highlighted this one ahead of time. Can't recall. Pulled back, back tested for a while, exploded up. Seems to be flagging right now. That looks like a little bull flag action. So maybe another run back up here to that level around 9 cents a share. That would be a 90% return if so. Again, do your own due diligence, and if you're not familiar or comfortable with trading penny stocks, then stay away from those last two. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.